presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. As you know, S&P's going through the roof here. We're going to take a look at the 10-year immediately. This is kind of what you hope and pray for. God, I hate to use those two words in trading, but unfair lows on the 10-year daily right now. Kind of a nice situation, 132.25. Again, you know, we talked about when you have these yellow peelbacks in the scanner in particular, and especially on the charts, on the indicators, it's a foreboding type mechanism for having a new profile up here. And then you've got some new high probability areas to pick battles. And considering that the, 10 years basically coming off of, a stratospheric move here. And at the same time, the S&Ps are making incredible moves up. It's a little bit easier in my mind to look at the 10-year from the long side based around these inflection points than to try to short the S&Ps. And if the S&Ps continue to go north, I think you've got a good buffer zone that's already been kind of, painted for you with the 10-year not hardly pulling back at all in the grand scheme of things. So what's the easier trade? That's always what we're trying to identify. In my mind, the easier trades try to go long the 10-year at this inflection point than to try to short the S&Ps when it comes to kind of being in the ether up here with nothing to hang on to. So here's the daily on the S&Ps. There's moving past that 2101, 2105. And 2141 is where we're at right now in the September contract. So again, that's the daily. Here's the 240. And profile appearing below price action's pretty bullish. That was, 6 hours ago when that happened? We've used that as a little bit of a launching pad. And again, nothing to hang on to up here. But, conditions can change. People could start taking some profits on the S&Ps. And if that's the case, going back to the 10-year, you got to, again, a long situation. You've had a pullback into support, and that's just the way I'm looking at this. There may be a much bigger move in place when it comes to the 10-year on the downside, but again, trying to put probabilities in your favor, you've got two things lining up there, as we've just spoken about. Gold. Let's kind of hit the rounds here really quick. On the daily, on gold. Okay, so yesterday we talked about this 1377 area. This is the August contract. Let me check something really quick. This is the August contract. I was just making sure. New profile. We talked about these two numbers. They're still in force, 1340 and 1315. I like how gold's acting. Even though we've had a little bit of a pullback here, $30 an ounce. Again, still, looking at turning the rents the same way, looking for those high probability areas to pick battles. I think you got to wait and see on this one. Again, you've got 1340, 1315 staring you in your face right there, and I don't think you should do anything with this until we have, again, like the 10-year type mechanism happening. Crude, this really upsets me. I was trying to pick some battles around here, had too tight of a stop around 44.66, 44.67. Why are those two numbers important? Here's the bottom of the box on our weekly, 45.66, 45.67, unfair lows on the 240. I wasn't expecting this to rally back like that, but again, you've got to you got to now just take it for what it's worth. I was hoping to get a little retracement on that and be able to short it, but again, it was a little bit of a lower probability trade there. Taking a look at taking a look at beans here. Talked about this yesterday. New profile attempting to appear. This is now. We had that 10-16 neighborhood. This is now going to be. Again, it's very evident. I'm showing you the numbers here. 1034, 1035 rounded off. That's going to be the back the truck up on the long side, in my opinion, now. And you've got 1090, 1091 up top. So, I think those are the, the big numbers you really need to pay attention to. You've got 1072 and a half, 1091, and 1035, those big numbers. And right now we're just kind of flopping around in no man's land. So I don't see a lot of leverage this minute. The dollar, still like this from the long side. This could be something to watch to possibly disengage what's going on with the March forward with the S&Ps. Again, this thing's spinning around. Monthly nationals don't like a higher value dollar. That's probably going to be something they're looking to as an excuse to take profits. So if this thing continues to spin around above 95.76 and head higher, that's going to not bode well for the market, the stock market in general. And right now, I think you still got to play stops below 95.76 on this one. Targets above, you got a real good risk reward on this one. Around 98 relative to the stops. Okay, let's hit some currencies really quick. Let's hit the euro. God, I hate this product. Still looking for this to revisit the 109 area. A little bit of a new profile attempting to appear action on this right now. So you might get some better inflection points to lean on to play defense on the short side. I was primarily using the 240s. Look how that worked out last night or early this morning. That was disturbing. But again, I like how we're back in the box and we've got a new daily profile attempting to appear, which means that we're going to have some even more higher probability inflection points to pay attention to. Aussie dollar, I've liked this trade. I've liked it above, getting back above 74.81. I talked about this yesterday. I still think 77.46, 47's in order on this one. And here's the daily. Talked about this yesterday, coming back, touching that 75.39, now heading higher. That's where you play defense. That's where your stops are oriented. And you've got a decent risk reward on this one. 75.39, 75.69, that's a big support area on this product right now. The yen, we talked about loving this one from the long side. A little disturbing how we don't have a new profile attempting to appear on the weekly yet, but talked about the risk reward on this one. Stops below 101.33, and we're about 250 points higher. Easily, I think we can get into 105.5. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Not a lot of, economic announcements today. The SEC is investigating Tesla Motors for possible securities law breach after the electric car maker failed to report a fatal crash in May. Let's see what happens to Teflon coated. Oh, here we go. Let's make sure we got our chart here. Let's just pull up Tesla really quick. TSLA. There we go. On the right chart now. Don't know if we have any prints this morning. Yes, we do. Nobody cares. All right. So the big numbers up top, 2033 on Tesla. Why is that the case? That's because that's the case. So 2033, markets dragged this thing up without question. Pre-market, we're trading 2025. You hope that thing kind of continues to power up a little bit. We were in no man's land talking about 202, 2033. We hope we can get to one of those areas. Okay, so in this is kind of a cool situation when the market just makes a big move one way or the other, down or up. In this case, up, obviously. So what I did in the scanner, it's a great place to find opportunities in an environment like this. So one of the things that I do is I look at stocks, try to find stocks that aren't really performing relative to our balanced areas or profiles. And you can do that in many ways. You can come in here and just kind of play around with certain scenarios. You can say, okay, well, what's forming new profiles up top and looking like it might give out of gas. These are kind of profit-taking potential things on the long term. As I hit that new box here, and then if I hit it on the daily, here's some other ones, and I don't see anything lining up there. But not saying that these are just flat-out shorts. They're just situations that are saying, hey, you know what? We're probably going to have a new balanced area here. We may come back and explore that entire fair auction. Why suffer through that? And that's what that means. Again, not a turnaround situation, but one of the things that I I really love to do is to try to find in this type of environment, try to find stocks that are really just not participating. So what I did this morning is I want to look at stocks that are, strong downtrend stocks. Strong downtrend just basically being, whatever this formula here in the scanner says it predicates that to be. But so 3 stocks. Humana is kind of a story stock, as you guys know. Very, very fundamentally news related lately. So let's just throw that one out. Let's take we're going to take a look at a couple of different sorts. But let's take a look at Goodyear Tire and Rubber Company. This one I looked at on the close yesterday. At the end of the day, I hate it when people say that, but literally at the end of the day yesterday, I like to go into the scanner and just try to find opportunities and things I want to just put on my radar screen for the next morning. Then I dump them into kind of a custom portfolio a lot of times and just kind of monitor what's going on. And it's easy to do this by going over here and, clicking on a custom portfolio key. Let's just, you can have them right there. It's very fast. And you can kind of flip back and forth to quite a few different things, custom sorts, custom portfolios, futures, Forex, ETFs, the whole 9 yards. But I was looking at Goodyear Tire and Rubber Company on the close yesterday. And here's the daily. I like how this thing closed and got away from this inflection point on our daily. And here's our weekly. So again, you got price action coming up into a bottom of a profile on the weekly. You had that happen on a daily. Market dragged this little puppy back up. This is in my opinion, a very cool setup on the short side, because if the market does pull back at all ever, which we don't know if that's going to happen. But the good news is on stocks like this is, we've reached resistance. If the market continues to go higher, it more than likely could have a little bit of a time getting through these weekly and daily unfair lows. And again, you're trying to play odds, probabilities in your favor, etc. And this is one that's kind of cool. You've got a little bit of a bounce. Might be time to whack it again here. Also looking at Zions Bank Corporation. These are stocks that just haven't really participated lately. Again, this is a stock in the XLF. You broke down below weekly profiles. You're kind of coming back up into them. And those daily, let's just go back to our landscape view here on Zions Bank. You've got a pretty good lid right there. 25.92, 25.76 play defense. It's not been one of the XLF stocks. It's just been kind of busting a move. I can't believe I said that. So you got a stock showing that I don't want to be bought in a larger way like some of the rest of the XLF stocks. And let's go into the and we're going to visit a couple of other custom sorts in here. Wow. Is there any sector that's showing red on any time frame? Well, the utilities finally. 10-year pulls back a little bit. My God. Whew. This is pretty impressive. So let's go into the financials. And there's Zion's way down there somewhere. There it is at the bottom. And you'll see it's just not really cooperating. That's why it showed up on that sort. Let's take a look at Regions Financial Corp also. Here's our daily. And that's a pretty cheap stock, 865. And we kind of popped our head back up into 865, 858. A very similar situation that we just spoke of. Brexit not wanting to really do its thing by rallying back. There's a reason for that. It's not on sale. And you've got places to play defense. Remember, this thing kind of broke stride before, and now we're coming up into some areas where you can play some defense. I know it's an $8 stock. But again, you can monetize that accordingly as far as position sizing it based on, the price of the stock, orient stops, the whole 9 yards. So I like that setup in the XLF. A couple other ones we're going to take a look at here. Let's look at Invesco PLC. This is our daily. This is our weekly. Something to put on the radar screen, in my opinion. Again, remember that weekly takes precedence over daily over 240. Host Marriott Financial Trust, not a bad one. 1726, play defense around that one. Fifth Third Bank Corp. Here we go. There's the daily. There's the weekly. I love these setups right here for some quick trades on the downside, especially when the S&Ps are just in a maddening way, just have just lurched forward, and these things haven't really participated. We're going to take a look at CBRE Group when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I want to pull up one thing in the scanner. Here we go. AXP, we're looking at some stocks in the XLF that obviously this thing has outperformed since Brexit. But the good news is on this one, there's the daily unfair highs. Here's the weekly, coming up into them. I like this type of trade a lot. 62.90. Here's the 62.78. So I think you got some decent resistance there. We've climbed pretty high. And again, stock could be considered defined in a downtrend, broke down and rallying back up into former support, right now resistance, especially on the weekly here. So I like it. What was the Dumb and Dumber? I like it a lot. Here we go. All right. So had a question, or not a question, but an idea. We're looking at the velocity shares 3 times on silver, it looks like. Paul, are you you got your seatbelt buckled? Anyway, you know, there's a lot of upside to be made, and I guess these 3 times velocity shares if they come apart. And here's the daily. So we're kind of yesterday hovering and closing literally above unfair highs on the daily. Now, could we slip back in there? Absolutely. But let's just take a look at silver here really quick, the underlying. So here's the weekly. We all know what that looks like. Here's the daily. And here's the 240. So there's really, you know, there's a couple of things I think still in the long camp's favor for silver. So the daily, we talked about this profile appearing below. We talked about 1904 when gold was more than likely going to hit that 1340 general area, which it did, 1336, 37, something like that, and then bounced. Silver obviously did the same thing. So we kind of drilled down into the 240s, and you know, in all honesty, I would just have to say that this looks still very good on the long side. And I like how it's spinning around up here above these 240 profiles and closed above the daily. So looking at USLV, the question in the den, I think you might want to wait a little bit on this one. You might have something better to leverage off of. And if put a gun to my head, I'd actually want to be long it. So that's my take on it. Of course, it'll fall apart now, but again, I don't think you have a really good place to play defense against this thing, and as of right now, the really cool thing possibly to wait for on silver is just have a new daily profile just start to appear or attempt to appear, and then have some harder core things to lean against. If that makes sense, Paul. Crickets, okay. I get it. We're going to go back to the scanner. Again, we're in the XLF section, and let me just pull up the XLF here in our e-signal charts. I get nothing for saying that, by the way. All right, so here's the weekly. We know what that looks like. Here's the daily. So we've kind of gotten up into this, and that's why I focused on the XLF stocks previously, is because the whole sector has just been dragged up into a major inflection point here. And some of those stocks in the XLF that we were just looking at, you've got the market that's just gone crazy. The 10 years at possibly the bottom of a profile, ready to bounce, believe it or not. The market, if it goes higher, it goes higher, them's the breaks. But you're always looking for correlations and things to pay attention to that might provide some sanity when it comes to your trading. And I believe fully that this is one of those times. So what do you do to try to increase the odds? You just go you just go into that particular ETF, drill down into it and say, well, what's the crap of this sector, and what are the ones that are literally weaker than the sector, and ones that I can lean against some inflection points to play defense against to try to get some points today or tomorrow. We pointed out a couple of those earlier, and you can review the tape today if you'd like. Goldman Sachs. This is beautiful. 152.26. So again, some of these stocks, XLF at that inflection point, some of these stocks that are weak rallying up into some of these inflection points, Goldman Sachs being one of them. God, I hate that company. Talk about a bunch of criminals. So here's the situation. High price stock, got to give yourself a little room there. Trade it probably in lesser share amounts than you would something else. 153.99 pre-market, so we're a little bit above that inflection point. So what you want to do with this is wait until we migrate back down below, 152.26. But you've got some other stocks that we looked at that are a little bit more riper than this one probably, but this one could give you a pretty big bang for your buck. We looked at Invesco. This is one, again, you want to stay away from the ones like this. These are ones that have literally been outperforming the market. And even though we're showing top there, that doesn't mean pile into something that's basically almost beating the S&Ps, I guess. We looked at Host Marriott Financial Trust. Again, a similar situation. Getting back up into the top of the profile could provide a little trading opportunity there. These aren't investment type shorts where you get your grandkids into it short and just kind of don't look at it anymore. We're just using the market against some of these instruments against the sector right now. So let's go back to the ETFs. And Paul, don't let me sway your judgment on that too much. I mean, I'm just kind of telling you, again, displaying what I'm seeing. And I try to use the profiles as a roadmap for me to block out one side of the marketplace. And now in silver, I have to block out the short side on that one. It doesn't really, on the, what was it, the XL, USLV, I just have to block that out right now. I mean, there wasn't a lot of things in its favor to get short right now. Okay, so we're back into the ETF profile heat grid. We're going to take a look at the utilities. Here's the chart on the utilities. That's just amazing. So let's pull up the XLU. All right, so as we know, this was the latest launching pad, 49.88. You got the 10-year at support right now. Remember that. Looks like we're trading pre-market 52.19. We're going to talk about this a little bit more when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Taking a look back at the yen, had a kind of a private question about this one. Where's support on this now? I'm a big fan of this thing moving back up at least to 105.5. 103, that general neighborhood is going to be support on it now. Obviously, the Nikkei itself repricing itself a little bit to crappier yens, and also I think just being at a major support area on the yen. There's really not a lot. Yeah, I'm looking at this one kind of like the euro, just trying to stay short with the hedge, and the yen just trying to kind of weather any volatility storms on the way back up. I really feel like this particular product is going to move a lot higher. Going to H&R block, HRB. Don't you guys love tax season? God. This will be my version of, you know what, if I was to do taxes all the time. Ooh. Anyway, so you can look at this two ways. Technically, it's obviously underperforming the latest market moves up. Let's see where it's trading pre-market here, if it's got a print. No prints this morning yet. But you can look at this two ways. You can look at, hey, we kind of have made some higher lows here, and we've gotten back at least into the weekly balanced area. I've been a big fan of kind of looking at areas to short this thing. If you watch this show, I've mentioned it a couple of times, trying it there, then trying it there at 24.62. If we get back below 23.06, I'm going to feel a lot better about being short this thing. But I think we just kind of have been dragged up lately because of some recent market activity. I don't know the fundamentals behind this right now, but something seems wrong. And again, that 23.06 is very similar to 23.28. Again, I think we could roll over here, and that's where we probably wait and then play some defense above that DMZ, if you will. Just a quick look at that. I'm not super excited to be long, put it that way. Let's relook at the 10-year here. 10-year's bouncing a little bit off this area, 132.20, 25. I think we've reached the low of what? 132.23, trading 132.27 right now. So again, this is one of the more attractive trades out there to me right now. Instead of trying to go short the S&Ps or buy the S&Ps and the ether up here, the 10-year is just giving you a nice pullback to support, and the S&Ps have been going ballistic. Let's just revisit that. Just screaming. And people going short, having to cover, people going short, having to cover. There's been really not a lot of reasons to try that technique. And just looking at the 10-year, the easier trade possibly, you've got a place to play defense on the 10-year, and I think the odds are in your favor on that one. We talked about beans. We talked about gold for guys who are coming in here late. Going back to the XLU, we're going to talk about that one as we left before. Here we go. The XLU, the 10-year being on support, this thing actually acting a little bit better than the 10-year. Pre-market, we're trading 52.19, so a little sagging down a little bit here. But again, if the 10-year's on support, this thing, kind of in the middle of a profile here, so not a great place to be able to play defense against it. But I don't think that the XLU trade is over, believe it or not. And the 10-year is kind of predicating that. If it bounces off this support, you'll obviously see this thing probably move higher again. Not the exciting trade out there, but sometimes boring is good when it comes to trading. Here's Apple. Haven't quite got up to that area where we can just lay the wood to it. 98.23 daily unfair high and 98.64 weekly unfair high. Play defense above. I think this thing could come apart again and easily revisit the 92 area. So I think you got a decent risk reward on this one. We talk religiously about not shorting this thing. Amazon, again, things on their highs don't have to be too high. On a relative strength basis, this thing is just time and time again showed itself. Just like the 10-year, market's pulling back, we're on support, 680. We get up into that area. We talked about not shorting and waiting for the breakout. I mean, this thing still turned the wrench the same way type scenario. I think it just eclipsed Berkshire Hathaway, if I'm not mistaken, on market cap. Good old Jeff Bezos. God, what if they announced antitrust investigation on that thing? Whew, that would get ugly. Oh God. Netflix. I like how this is acting now. 96.18. Last week we kind of closed above. Now we're failing. That says a lot right now this week to me. 88.35 could be in order on this one. Home Depot. I don't know if that's a real print this morning. 136.28. I don't know. It may be. 136.28. Okay, so I had a couple of emails about this one. New profile. Again, you've got better shorts out there if you're looking to short this, in my opinion, but you do have something to lean on if we can get back down below it, if that is a real print this morning. Looks like it might be. Yeah, you've got better shorts out there than this one. IBM, we've talked about not shorting this. It's closed above 154.09. This is still the case here. That's going to be support on this stock. This market could keep going north. Doesn't have to come down. Let's take a look at the FTSE really quick. And we're going to hit the British pound. British pound repricing. That's what the FTSE looks like. So let's go back to the British pound. We didn't hit that earlier. Talked about ultimately getting back into this 132 area. Had a new profile appear this morning. We've broken out above there. There's the 132 area. We've hit it this morning. There's the high, 131.88. There's that 132.13. Pretty much have rallied back up into that general area where we talked about possibly looking at it from the short side. Reached a high 131.88, so gotten close to it in a volatile market. I consider that satisfied. We'll be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Taking a look at December corn, and I'm going to put some oil in my chair. Apologize for those creaky sounds. Yeah, well, yesterday we got a new profile. We went down and touched it. Yeah, had about an 8-cent rally off these unfair lows. Now we're crowding it again. I mean, the problem with corn, man, just seemingly stuff has worked out here for this grain. And I rode around a lot this weekend on my motorcycle. If you ever have a chance to get an adventure bike, just get one. They're awesome to have. You can just turn off don't get a heavy one though. Turn off the road. If those things go down, they're hard as, I don't know what to pick back up. But I would not go higher than an 850 or something like that. But I was riding around some logging roads in the middle of nowhere, and just kind of some farm fields, and man, the corn just looks insane around here. The guys, a lot of the fields down there are getting over 200 bushels an acre. Incredible yield, and it's beautiful. I mean, literally beautiful fields of corn. Anyway, so 352 unfair lows down here. I really feel like, this is not the type of action you want to see. This thing's probably going to be broken, believe it or not. It is what it is. The price of corn is what it is. It doesn't have to match production costs or anything else. It's you want to see these things stay away from these inflection points, and it looks like we actually could head lower. So I don't know if I'd be buying this bounce this morning or buying this inflection point this morning. Yeah, I mean, the corn. Somebody's saying it. Somebody's saying that corn looks good in the western part of the state. Yeah, it's beautiful. Literally, makes you proud to see something like that. Here's September wheat. The profile 420. I mean, I think that's possibly something you could play around with, but right now we're still kind of in no man's land on it. The unfair high is 446. So before we end the show, I just want to do a little recap on some of the big ones that we look at. Here's oil. We're getting back above 45.66. So again, if we close above there, that whole scene's going to change a little bit. Then you could use that as a little bit of support to go back to 47.71. I know I've kind of changed my tone on that a little bit, but you have to as a trader. Gold, it's kind of slumping off this morning. You've got 1340 sitting there. That's the first inflection point, 1315, then 1377 up top. The bonds, the notes, excuse me, decent place to pick a battle. Again, around 132.25. The dollar, I love that as a long still. And the S&Ps. I think that note trade's a little bit easier than dealing with trying to, go long up here or go short up here. So that's my take on the S&Ps. It might be time to just sit tight. This thing can go higher. And remember, a lot of folks out there are looking at, oh man, day traders, that's what really fuels a lot of these moves up when you get into this area is people think it's gone too high and they start shortening and then they have to cover, especially by the end of the day. Brokers are tapping them on their shoulder. If there's a thing called a broker anymore, I don't know. Do they have brokers anymore? Anyway, silver, we talked about that one. Oh, man, I was going to hit the XLE. Guys, stay tuned for Larry and all the hosts on TFNN the rest of the day. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.